Good morning, traders. It is 8:02 Chicago time on Wednesday, the 10th of January, 2024. Thanks for joining me on episode number 2602. I've been absent for a couple days now as I'm traveling, and now I'm catching up with you a little bit. A lot going on over here, so let me turn down my news feed. Um, So, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today? The posture for the market this morning is mixed as we come into the session here. We're slightly below our settlement prices, really sideways trading since yesterday's close. You can see that um, the drawdown is, mostly in the single digit basis points, except for the Russell at 20 basis points below. And that's really it. No major news really overnight. Earnings, nothing major before the open. KB Home, which is one of the smaller home builders, reports after the close. Uh, Themes, events, trends. The big piece that came out yesterday is that the SEC Twitter account was hacked, and there was a post indicating that Bitcoin ETF had been approved. Bitcoin shot up and quickly spiked up, and then the SEC reported, Gensler from the SEC reported that the account had been hacked and that the ETF had not been approved. But it kind of gave everybody a preview of what would happen if the Bitcoin ETF was in fact approved. Um, Other than that, there's some favorable inflation out of data out of Australia, Norway. Bank of Japan rate hike expected to be very modest now. The market has been uh, pretty set on the Bank of Japan continuing to hike rates. Japanese wage numbers were cooling, and so the uh, anticipation is also cooling for further rate hikes, and so their stock market has been tearing up. The main thing we're really waiting for is tomorrow morning. We look for U.S. CPI, um, and then the bank earnings start on Friday. That kicks off the bigger part or the more aggressive part of the a substantial part of the earnings season. So tomorrow morning at 8:30 Eastern, we got core inflation expected at zero point 0.3 and an inflation rate month on month expected at zero point 0.2. The inflation rate year on year is expected to 3.2. Remember, the Fed is targeting 2%. The year on year number on core is 3.8%, so it remains higher than the full number. Then we also get initial claims, and then that afternoon or that evening, we get the inflation numbers out of China as well to boot. Um, so the overnight session, as far as numbers that came out, there wasn't anything significant that came across. The key significant event for today that's scheduled is Fed's Williams at 3:15 Eastern. So that's 45 minutes before the cash close. Williams has been a mover of the markets. You'll want to pay attention to that event. But other than that, you're going to get your crude oil inventories at 10:30, and everything is pretty normal. Auction condition for the ES now is relatively balanced. We did try to test lower, but we've come into balance really. 152,000 contracts traded, pretty light overnight session. The inventory is completely balanced. And the range is only 18 points, which is quite normal. The point of control remains under 4,800. We note that 4,800 is very tough, has been very tough for these buyers to hold. So this makes the market balanced overall, including all of yesterday's afternoon trade. So nothing really special to see here. Let's take a look at the technical picture. What we have, let me zoom out here a little bit. You could see this was, remember, we were talking about the 4760 being a key number. Actually, I don't know that I talked about this in public. I posted some scenarios for this rally in the Convergent Trading chat room. And the expectation was we would very likely breach the 4760 and reverse the one-time framing down. I'll show you the one-time framing down in a minute. But very, very beautiful break here. Nice test of the 4760, pull back to the IB high, and then it finally breaks through and comes right back to the tick to the 4760 and a quarter, and then takes off. And what we end up with is a trend day profile with some relatively poor structure below. We'll look at that in a minute as well. And then from there, we pulled back yesterday. The expectation for me yesterday, the primary scenario, is that we would open sideways, retest the 4760, and then end up going sideways. That didn't really happen. That's what I posted, but that didn't happen. The secondary scenario is an open, the test down towards the 4760, impulse is up, so I'm going to be looking for a buying impulse, and then for it to push back to 4800. So we basically got scenario two without the substantial pullback yesterday, but you could see the impulse here, which started down here. So we impulse, we pull back to the mid right there, and then it takes off, and then it retests this. For those of you who are with Convergent, please watch the trade talk. We talk about these collision areas in confluence of the mid here. This is a trade setup for a retest of 47.98. It went to 4800, came off, and then went completely sideways. And you can see that basically the afternoon was a very balanced distribution. So what we've done is, we've rallied 2 days ago. We pulled back in the overnight session. Then we took back the upper end of this rally, the settlement price up here. We took that back, and we were hanging out up here. So this is telling me that although buyers, the key thing it's saying is buyers are not able to hold the 4800. This mouse here is very tough to write with. So let's see. It's not too bad. We're not able to hold the 4800, but it also tells me that we're not coming back into the 4760 either. So what this is a stalemate by the market, and what that's doing is it's causing the trade to be quite choppy. So you can see the overnight session again, another attempt at 4804, comes right off, falls below the century figure at 4800, and we're holding sideways. Where are we holding? Let's move this, zoom in a little bit closer. Where are we holding? We're holding on top of a relatively balanced overnight point of control, on top of VWAP, on top of mid, on top of settlement. Complete balance here on relatively low volume. So I'm going to give you a minute to guess what that's likely to look like for the open. Remember, we're doing all of this analysis pre-open so that we can set our dial to the right place, hopefully, when it comes to what the open might look like, and so that we don't get caught up in the frenzy of the open and end up getting chopped up right at the open when the market's imbalanced and we're not anticipating that it would move directionally. It would have to move directionally for us to start thinking and trading directionally. Until it does that, knowing the conditions that we have here, we expect balance to continue into the open. However, again, we are unable to hold above 4800, multiple tries, and we never got below the 4760 down here, and so we're sitting sideways. Yeah, poo sandwich is about what my analysis shows as well. So that's that. this sets us up for the open. Very clear failed retest of the high yesterday, with the expectation that this local week low would be taken. Expected it to happen here. It held, came right back, broke these tops, not cool. And then once it did that, it came right back to the IB high before the next bounce. So this is just short time frame traders, the interns basically clobbering each other over every tick. And that's the kind of open I'm expecting today. Let's take a look at the TPO chart here. So we can look at the bigger picture. So this is day session only TPO chart. I'm going to show you the detailed chart. So the rally that occurred the other day essentially took us from down here up to the low volume node. So we have two major distributions here. Okay, there is another distribution down here, but I shouldn't have merged that day in yet, and I didn't want to unmerge all of these and waste time remerging them. So really it's two distributions in play. The other day it pushed up into this low volume node, and the idea here is that if it stays above, if it closes above and holds, like firmly holds, not just the bar closes, because who cares about a bar close? I never subscribe to that approach. But if the market closes above, and we could see that the 4800 is supported, then what that does is it puts 4815 into play. That's the next key area. That's this little nubbin right here. That's our high volume node for this upper distribution. It's essentially what it is. It's the micro composite for the upper distribution. And so if we take 4815 and that becomes basically a base instead of resistance, which is initially expected to be resistance as we push into it, once we take that and that becomes our base, then the high is very likely to be taken out. We have a relatively weak high. If you recall, the way that high was made was on just an absolutely balanced, sideways, consolidated, Gaussian, even distribution type profile. And it's very, very likely to feed a push into the next mid-century figure, which is 4850. So that's the anticipation is, hey, what do we do once we go up to 4815? Do we fall off of that high volume node, or do we hold it as balance and then push away from it, using it as a base for a run at 4839.75? That's the high so far, right, in this region. So those are the two key scenarios there, and you could see that yesterday it made another attempt at this low volume node and failed to kind of hold it. And yesterday closed right on top of the point of control. So yesterday really was a balanced day overall. Okay, here's what the high looked like. See, this is the high right here. This is what formed the high, and a very orderly drop. We open, test the prior point of control, and flush down, and then come back part ways. And then the next day opens, retests the gap zone, retests the prior low, flushes down, then closes in the middle, and so on and so forth. Very orderly type of market, very orderly type of trading. And then yesterday, the day before yesterday, you can see there's weak structure. We have single prints that we filled in yesterday. We cleaned yesterday's structure up for the most part. We never got down to the break point of the one-time framing down. Notice the highs are lower, lower high, lower high, lower high. We call that one-time framing down on a daily. We broke, and we just never tested that base. We tested it on the day of the break right here, but we didn't test it. So what this has done this last day, yesterday has done, is it's cleaned up a fair amount of that weak structure from the day before that, from Monday. Okay, so let's look at the NQ. So let me just go back here a minute. What am I expecting here today? What's to be expected today? My main scenarios are really just chop, and you have an equal opportunity of a break higher as you do for a break lower at this point, because we are not holding the 4800 yet. We're also not giving up the VWAP and mid. You can see the mid tested here, here, the mid and VWAP. Like, it's doing a good job holding the bullish side, and it's doing a good job of holding the bear side. So to me, it's not about which side it breaks on. It's a question of, do we take out the prior high of 4803 in the overnight high? So now we have this 4803. And then the next piece is 4815. 4815. And this is the big one. 4815 is very important. We want to see how the market reacts there. Otherwise, we're looking at the 4786 right here. 4786 to see if we can break through the afternoon swing to squeeze some of these people out. Or otherwise, I'm looking for it to drift down. If it doesn't hold the 86, I expect it to drift down to 60 and take a retest of that. That's, I can't tell you. I don't have a lean this morning, although it's, we're still holding near the highs of the breakout higher on Monday, so there's a slightly bullish bias. The NQ, same kind of story. It's been up here and come off so many times. The NQ has been relatively weaker. Let's look at the NQ in a bigger picture, because it just isn't worth it to look at the. So here's the NQ. The NQ hasn't done the same kind of work the ES has. So if you look at the NQ, it pushed down a little bit deeper, and it hasn't come close to testing that dividing line right about 16,960 or so. You have two distributions, so the NQ is very likely to catch up. It also closed on top of its point of control yesterday, volume and TPO point of control, and it's holding the overnight range. NQ, same basic story. Does it take the 950 here and start pushing into the upper distribution? The upper distribution is relatively blunt, 17,000 being the key figure up here that they would need to test. They would likely test. Otherwise, we're looking for this thing down at 16,600 again. So the NQ has a little bit more catching up to do, and that's what it does. It kind of runs ahead, then it gets farther behind, then it kind of slingshots ahead against the ES and so on. I don't have any different scenarios for the NQ as I do for the ES. Same story. Crude. Let's look at the story of crude. Crude just absolutely stuck in this range here between $70 and $76. If you recall, we talked a lot about the fact that this kind of the crude has traded well despite the all the news that would likely drive crude down. And really, it's in a big balance zone, and the 73.70 remains the key price in the area. Crude opened at the high today and is driving down. So I'm expecting the crude gap. It has already filled. I expect crude to come right back towards that 72 quarter close yesterday. Not seeing any. We have the inventory report today, but not seeing any catalyst here to squeeze this thing up at the moment. The news yesterday was Saudi Arabia was reducing prices for the Asian market because demand is weak there, and I just don't see how crude is bullish at the moment. It's completely balanced, It's just consolidating. Okay, I'll leave you with that. I wanted to make an announcement. Unfortunately, I don't have the all the I didn't put the information together before the show started, but it is pinned in the live chat. We're doing a public I'm doing a public webinar next week. It's Is it next week? I think it's the 18th. Let me look. It's on Convergence Twitter. It's on the 18th at 1 p.m. Eastern. I'm doing a public webinar on just starting off the year with good preparation. The most important element to trading success is preparation. So we're going to be talking about that. We're going to look through what it takes to anything. Again, that's January 18th at 1 p.m. Eastern. Okay. I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.